Hi everyone, welcome to another episode of our monthly economic update for the month of April 2025, brought to you by the Economic Intelligence Unit through our platform Economy.lk. So today I thought of updating all of you all on the growth outlook. Currently, the IMF is having their spring meetings in Washington DC, and they have published their growth outlook for the world and different regions of the world, and that is what you see here in this particular slide over here. So if you look towards the left hand side, the IMF has given the world growth outlook for 2025 at 2.8% and 2026 at 3%. And if you look at to the right hand side, emerging and developing Asia, 2025 growth rate has come down to 4.5% compared to 5.3% in 2024, and 2026 it's projected at 4.6%. And also looking at this particular side, the outlook for world GDP growth. Now we mentioned that the IMF projection for 2025 is at 2.8%, but if you look here, according to Bloomberg and the IMF, the actual growth rate projection for 2025 was at 3.3%, but there has been a reduction in the growth forecast by 0.5% to 2.8%. Now, the reason behind all of this was the tariffs that were imposed by US President Donald Trump, and a lot of talk has been going around during the month of April on the trade side of things. But I thought of looking at it in a different manner by looking at the US bond market. So wrote an article on LinkedIn on this as well a couple of weeks back. So I thought of explaining this a little bit more in detail. Now, the US bond market is interesting. When uncertainty kicks in, usually what happens is the investors would flock to the most safest assets. So for example, US Treasury bonds, 10-year Treasury bonds, gold, the dollar, greenback are very safe assets. The Japanese yen is another example of a safe asset. However, during this time, something unexpected happened. As opposed to investors investing in the 10-year Treasury bond, what happened was there was a sell-off, and the Treasury yields, US Treasury yields, started increasing. Now, this is quite unexpected. And that is what you see here on this particular side over here. If you look to the left-hand side, top graph, in red, you see the US 10-year Treasury bond yields. And in blue, you see the German Bund Treasury bonds yields. Now, there was a sudden spike during the mid of April, and that was mainly, as I said, was because of uncertainty. And you see that if you look at the graph below this, where the World Uncertainty Index, indicated in yellow, suddenly increased during the month of April. But now, of course, the US 10-year Treasury bond yields have come down to about 4.258%. That is what you see on the right-hand side, from about the highs of 4.4%. And what you see here on this particular slide is what I was talking about. Usually what happens is the Treasury yields go down, and the dollar spot index also appreciates. But this time things changed, where the Treasury yields went up, which is quite unexpected. And now there are two views to this. One particular view is US Treasury bonds are held not just by the local government, but also by foreign governments. So Japan, for example, holds close to $1 trillion of US Treasury bonds. Whereas second is China, which holds about $800 billion worth of US Treasury bonds. So there was a view that during this uncertain period where US President imposed higher tariffs on the Chinese government, the Chinese government may have retaliated by selling off some of these bonds, resulting in the US Treasury yields going up and the bond prices coming down. That is one view. And another interesting view is something that is called Treasury basis trade, and that is what you see here. It's an extract from a Bloomberg article. What is this Treasury basis trade? Well, in the US, funds such as hedge funds would buy cheap bonds, expecting the bond price to go up in the future, so that they can sell it off and make a profit. So what they would do is they would buy cheap and sell off at a higher price, expecting that uncertainty would create a higher price. But that didn't happen. And what happened was bond prices actually fell and the yields went up. So these folks locally may have started to sell off some of the bonds, shifting their attention to gold. So that is another view that is also quite interesting. So these are two views from the bond market, and looking at not just trade, but from the US bond, US debt side of things, because US debt is at around $37 trillion, which is 122% of their GDP. And what's important is not the stock, it's the flow. The cost of interest, if it goes up, and if they roll over their debt, and if the cost of interest is high, that's a huge burden, fiscal burden for the US government. So this may have been one reason that the US president had a 90-day pause. Let's shift our focus now towards trade. So what you see here on this particular slide is the global trade outlook and statistics published by the World Trade Organization in the month of April. And according to the World Trade Organization, 2025 merchandise trade is projected to contract by negative 0.2%. And for 2026, trade volumes are increasing, they expect, by 2.5%. But there's a very significant risk. That is, if the suspended reciprocal tariffs by the US are reinstated after 90 days, the WTO expects global trade growth to decline further by 0.6%. However, that's on the merchandise side. On the services side, they are expecting a slower growth, but still positive at 4%. And what is very interesting is what you see at the very bottom in red. Digitally delivered services are projected to grow at 5.6% in 2025. Now that is very interesting. So the services sector is expected to grow much higher than the trade's merchandise sector, and that is quite obvious because the tariffs were imposed on goods, not the services side, but on goods. So again, coming back to this particular slide, what you see here, the world merchandise trade volume in terms of merchandise. If you look to the left-hand side corner, what is in orange, the dotted line, was the expected trade growth for merchandise. But because of these tariffs, trade growth is expected to slump, and that is what you see in green. So you see a significant difference in the graph on your left-hand side from the dotted line in orange to the line in green. And if you look at this particular slide on services, that particular gap, if you look at the top graph, that gap is much smaller. That is because what I mentioned, tariffs are not imposed on services. Now, this here on this particular slide is an interesting slide. They are looking at a scenario analysis, the World Trade Organization, where there are no new tariffs imposed, another one where the actual tariffs are imposed, the reciprocal tariffs are reinstated, and there's trade policy uncertainty. And they are looking at trade and GDP projections based on these four scenarios. And it is very interesting to see here. You can access this information from this Global Trade and Statistics report published in April of 2025. Now, I have been talking about the global trade outlook and the growth outlook. Let's come back to the local arena, local space. Let's look at the trade side of things. From January to March, EDB published their data on this. So if you look at this particular slide, the export performance from January to March 2023, 2024 and 2025. Yellow is merchandise, orange is services, and you see a slight growth in both merchandise and service exports. And if you analyze this further, looking in detail how each industry has performed, that is what you see here on this particular slide, the external sector performance for each industry. You look at the apparel and textile industry, Jan to March 2025, $1.3 billion in orange, as opposed to $1.2 billion Jan to March 2024. And what you see in the line graph indicates the growth rate for each particular industry. This covers merchandise and the goods sector as well. And the next slide shows for each country how we have performed in terms of our trade Jan to March 2024 as opposed to Jan to March 2025. So United States, UK, most countries, we have had a growth rate compared to Jan to March 2024 in this particular year. Now, that is on the trade side. Looking at the tourism side a little bit also, I thought it's a little interesting to analyze the tourism sector. What you see here on this side is interesting. This is the purpose of visit by country, and each country is indicated by different shades of colors. And on your y-axis, you have the purpose of visit. So for example, pleasure or slash vacation, you see right at the bottom, dark blue is United Kingdom, then you have orange, Russian Federation, in dark green, you have Netherlands, you have France, you have India, likewise. So it is broken down by purpose of visit, such as pleasure and vacation, visiting friends and relatives, MICE tourism, by the country of visit. Now, moving on, the tourism air connectivity is also an interesting aspect to analyze. So, for example, 2024 and 2023 even, Sri Lankan Airlines contributed the most to this. So, if you look at this particular slide, Sri Lankan Airlines carried the largest share, contributing 25.1% of total arrivals in 2024. And now we come to an interesting slide, and that is the average duration of stay and the number of tourists that come, because we talk a lot about the number of tourists that come in, but I think it's also important, as I mentioned before in some of the videos, to talk about the average stay of a tourist as well. So that is what you see here on this particular side. So for example, folks coming in from India, we have a lot of people coming in from India, but they stay roughly on average about 5 days, whereas folks coming in from say Netherlands, only about 50,000, but average duration of stay is 14.5 days. That's an interesting statistics that you see. So just wanted to cover the global trade, global growth aspects from the IMF perspective, World Trade Organization perspective. ADB has published their outlook report for the Asian region as well. We looked at the trade sector in the local region, local area. So I hope you found this video insightful. Do stay tuned in for our next monthly economic update for the month of May. See you. Thank you.